Hello, this is Manesh Patel from the EII Capital Group. Today is November 7, 2010. This is the weekly Ichimoku analysis for the global markets, where we cover all the markets from the US side to Europe to Asia. Okay, if you see any markets we don't cover in this video, please let me know and we'll add them to the list to pretty much cover. Normal procedures, this is for educational use only. All charts are in Thinkorswim, TradeStation, or FreeStockCharts.com. Okay, here are my contact details. Please note that the EII Capital website is going through some construction changes right now. It's going to be fully available in about a week and a half. We're also going to have the Ichimoku heat map available for various instruments at that point too. Okay, so please be patient with us and bear with us. You could follow us on Ichimoku Trading and also Facebook Ichimoku Trading too. Okay, so let's go and look straight at the global markets. Let's go look at the NASDAQ, because we've been saying basically go bullish for the NASDAQ stocks and go bearish for the SP 500 stocks. Reason why is NASDAQ's been leading the bullish run that's been happening, and that's been working really great for the last 8 weeks now. Okay, so if you look at last week, we had another push up. It's interesting because of all the elections in the US side too. So basically we had a huge momentum up, which is really good. So we kind of broke this pivot high from April, and we came all the way back up here from 12/24/2007, and we're sitting happy right there. Okay, now I'm going to expand the charts here. Reason why that's very interesting because now we are at the highs from 2007, right before everything happened. Okay, so remember, everything happened, pulled back here, then we came back all the way up here. Well, we're sitting right here, right there, and we're getting very, very close to the all-time high, which was basically right before all the Lehman and everything happened back then. So for the NASDAQ, which is pretty interesting. Okay, so we marked that level now. That's 2263. So it seems like it's just a matter of time now when we're going to get that level, especially now since the Chicago is still very strong. Okay, let's go look at the Dow Futures, and you can see the Dow Futures pretty much the same scenario. Charts looking good, Chicago's looking good, but notice we're far away from the 2007. Well, right here. Okay, so we're still very, very far. Now remember, let me go back to the NASDAQ. Let's just give you the exact date that we saw. Okay, that was here 11/5/2007, and if we go back to the futures, Dow Futures, 11/5/2007 was a couple of days over here, but let's just say it's right here. So notice this top here is still far away. Okay, NASDAQ is pretty much at its high before all the Lehman stuff happened. The Dow Futures is way, way off and still got a huge movement to go before it could get there. Okay, and now let's go look at the S&P futures. And remember 11/5, roughly around there. It's roughly right there. And the S&P futures still have a lot to go. So NASDAQ right now is on a point of breaking up to the top side, and the reason why is the NASDAQ, when the bull run happened in 2003 for the S&P and the Dow and all that, NASDAQ really didn't go up that much because of the internet bubble that had busted. When it did, basically the NASDAQ took a big hit, whereas the S&P 500 and the Dow really didn't take that big of a hit during the internet bubble bust. And if you look at the chart, you can see what I'm talking about. Actually, when the internet stocks and everything busted, financials started taking off, so that's when the S&P and Dow really started taking off too. So NASDAQ seems like it's basically going to lead us out of all this mess now and moving forward. So definitely keep a look on the NASDAQ markets moving forward, because it looks very, very good going forward. Moving forward, and I think it's going to be basically leading us out there, but who knows, time will tell. But right now, basically the charts show that the NASDAQ is at its high from basically back before all the Lehman and everything started occurring. So actually it's a couple points away, but not too far away. So we definitely expect the NASDAQ to get to that level sometime by the end of this year, if not very, very soon, and then time will tell what happens there. Okay, so let's go look at our global markets now. And let me shrink this screen down. These charts are from freestockcharts.com. I'm going to go to the weekly time frame. And the first place we're going to go look is the FTSE. Okay, if you look at the FTSE, you can see basically the FTSE is broken out, broke its pivot high too last week compared to everything. It looks good going up. Definitely going to sit there and wait for these levels right here. That's going to be one key level right there, 59.37, which we're pretty much there. So we're definitely expecting the FTSE get to about 66,000 level very soon because of the way it's going right now. Okay, so time will tell what's going to happen and when, but right now this thing's trending really, really well moving forward. Okay, so that's the FTSE. Let's go look at the DAX, the German exchange. The DAX, same scenario as the FTSE. So pretty much everything's moving into the same pattern. Remember, the FTSE and the DAX are basically resemble the Dao Futures to a T. So we're expecting the DAX probably to get to 7,000 too, just like the FTSE is expected to get to 6,000. Okay, so we're waiting to see what happens there, and then we'll go from there. Now let's go. Sorry, I changed my charts. Let's go and look at the Sensex, the Indian market. Remember, we talked about shifting out of the Indian market to the Hong Kong because there was a huge potential on the Hong Kong side because the Indian market was overweight. If you look at the Indian market, it really didn't pull back as much as we expected it, and then pretty much closed a little higher than the pivot over there. That's telling us that this market is very, very strong since it's a minor pullback. So the Indian market still has a potential going up very, very high, and because it seems like this second leg here, this was the first trend right there, then it consolidated in the second leg here, and then it looks like it's trying to do the third leg too, where well, not the third leg, but this is still the second leg with a minor pullback to keep on going up. Remember, if it bounces off the Tinkerton, that's a minor pullback. Okay, let's go look at the Hong Kong index. If you look at the Hong Kong index, this is why we said rotate out into the Hong Kong. It didn't get to the pivot high. It actually blew past it. So it's very, very strong compared to the Indian market. So the percentage-wise, we had a bigger movement on that one. Now, if you look at it, we're expecting it to get to 25,706, which is what our target level was. We're not very, very far from there. So be very careful when it gets to that level, and you know, make sure you're taking profits along the way. Okay. That's it for this week for the global markets. Hope you enjoyed it. If you have any questions, please let us know.